folks have seen a strengthening in the dollar index. How is that possible? We've created all this currency. There's inflation. How is the dollar index actually gone up?
The central banks are backed into a corner. What's going to give? I mean, at some point, you would have to think that interest rates are going to have to be increased, obviously, to rein inflation back in. Are you seeing any signs of that right now? Do you prescribe to that method of reining in inflation, obviously, by increasing those interest rates? And if so, what happens to the real estate market?
So if they raise rates, markets will crash. Just speaking of raising rates, look what it did to the markets. At the time of recording, the previous day it fell 500 points. And I mean, like I said, if there's any rate increases, it will be very minimal. It will almost just be,
almost symbolic, if you will.
It's going to be symbolic. One thing to be very, very aware of and cognizant as an investor, and here's what I do too. A lot of folks say, MC, you stay out of the news. Where do you get your information from? So I subscribe to a lot of newsletters. So yeah, you're going to unfortunately have to pay for information. Otherwise you're the product, right? We're the product of the legacy media. They try and get as many of us to watch them so that they can run ads to their real clients, to us. But if you're paying for information without ads or any of that kind of stuff, you're actually the client. They're producing content for you. So there's a lot of information that you can act on that. And have differences of opinion. Don't just subscribe to everything that fits in within your echo chamber. And the reason why I'm sharing that is folks have seen a strengthening in the dollar index. So a lot of your viewers might be, well, how is that possible? We've created all this currency. There's inflation. How is the dollar index actually gone up? And there's a gentleman that has a theory called the dollar milkshake, Brent Johnson, which again challenges your thinking of dollar devaluation, dollar crash, and so forth. But one thing that you have to realize about the dollar and why it's essentially doing that right now at the time of recording is the US dollar is still the world reserve currency. And I always say that to folks. Well, I said it's still the world reserve currency until it's not, which means number one, there's a demand for it. Countries and their central banks have to hold US dollars. And of course, we could get in a whole different conversation of, are some already holding less and so forth, but that's a different rabbit hole. The point is, it's still a reserve currency. They still have to hold it. There's a demand for it. There's no demands for Brazilian reals and South African rands and so forth. So the whole world has increased their currency supply in every single country. So the dollar, because there's a demand for it, has actually seen it strengthening relative to other currencies, and is still quote unquote seen as a safe haven when it comes to financial markets. Now, eventually, it will have its day. It could be inflated, and there will be a point in time when that turns. And that point, I believe, is the theme. There will be confidence. That's what happened in Weimar, Germany. There was a massive increase in currency supply, and everything was going until the confidence in the money was gone. And then people would rather have things than the money. Same thing as in Zimbabwe, same thing as in Venezuela. But we're not there quite yet. So as far as the Fed, yeah, they're cornered. I don't think that there will be any significant. It will just be symbolic. There will be inflation. It's terrible for the economy because essentially, it's going to lead to a very bad economic and financial situation for the majority of folks. But I want your viewers to be on the right side of this, to position themselves and benefit from inflation like the rich do. That's why you have more millionaires than ever, more billionaires than ever right now, because you can position yourself in this crazy world to be on the right side of the money moving, because as things are changing, money's changing hands. So I want them to be on the right side of this.
Yeah, no, and I love that. And, everyone or most people that are watching, they're watching from an investor standpoint, which we have a lot of investors here on the channel that are looking for information, education, guidance, whatever you want to call it. But they're also watching from a consumer standpoint. I mean, right now, the biggest three are going to be, it's going to be housing, transportation, and it's going to be food. Those are going to be really where general consumers getting hit hard in the pocketbook. Now, we had a really a high increase in wages last year. I think one of the biggest increase, if not the biggest increase in the history. But when that is offset by inflation, you know, they're actually coming out in the red on that. So I think I read the other day, and I wish I would have written it down so I could source it, but the average family, even with that wage increase, is underwater $1,500 year over year from last year based on inflation. So a product or service that cost you $100 last year is now costing you $107. Well, if that's across all, you know, kind of verticals like transportation, like food, like housing, I mean, that is just lighting people's checkbooks on fire right now. And everyone's just kind of looking for that end in sight. How do you see it kind of coming to terms, and at what point, you know, do you think there's going to be a slowdown there so that people can kind of stop, you know, living in that kind of panic mode?
Yeah, I think when that stops is if there is a wild card that produces a deflationary event. Unfortunately, if we just keep tracking the way that we're tracking right now, they have their back up against the wall, folks. They're going to have to continue to expand the money. But if there is a wild card, a deflationary event that comes in, then you're going to start to see some relief initially. And we all know what governments and central banks do when there's a wild card, like, for example, let's just say the debt market blows up. Or
I was going to say, rattle off a couple deflationary events that our audience can do some research on.
Yeah, so let's just say, for example, the debt market, which is the biggest market in the world that keeps inflating, which fuels all of the equity markets around the world and the real estate markets, by the way, and is basically keeping economies afloat, because the real economy, every single person that goes out to the store here, in any store, knows the real economy is essentially just plummeting, really in free fall. So deflationary events is a debt market can pop and blow up because it's a massive bubble. That will have a huge deflationary effect. It could be stock market crashes. Real estate markets could crash from that. Commodity markets, essentially, and crypto too, initially, right? Crypto will get hit hard because it's very liquid. So something like that as a wild card. You could have a power failure, a grid down like in Texas. You know, when I used to say things like this, people used to laugh until that happened in Texas. Right. I think our systems are very fragile, all of our systems. You know, think about big cities, the wear and tear in big cities. What do you think their you know, the electrical system looks like, the plumbing system and so forth? So a grid down scenario is not far-fetched after everything that we've seen. What about a banking crisis? We've seen several banking crises. We already, you know, people listening to us or watching this that are in Lebanon or that are in Turkey, they go, yeah, we already have them, MC. You're late to the party. We've already had our deflationary events. So so you could have those events. I mean, there's a lot of war, for example, could break out. Geopolitically, there's tensions in Ukraine, there's tensions in Taiwan, which again, it's fight or flight, fear. People contract at that stage, they stop spending money, everybody goes into preservation mode, which essentially will really, really contribute to a falling economy. So there's a lot of deflationary events that would eventually stop it. The reaction of the governments and central banks to that could be more dangerous than anything, just like it was in 2008 and 2009. Had they just let the economy self-correct and have all of the bad investments and malinvestments clean itself out, we would have been in a different state right now. But they reacted by bailing out everyone except Main Street, right? Financial institutions and corporations, and then also increasing the money supply. So that's how I see it would stop.
So you're saying dumping trillions of dollars in stimulus money into the economy was probably not the right way to keep inflation down?
It's and that's the thing. I think the average person didn't quite grasp it when it happened at the time, when they received their check directly from the federal government, that it was a bad thing. Most people would say, oh, come on, it's not a bad thing. I said, this is going to hurt more. This is delaying the hurt, because the money that they're getting right now is not going to be able to buy a lot in 12 months, 18 months, 24 months. And it was within 6 months you started to see increases, right? Folks started to see it. So it even came sooner than that. Look, the money supply has been expanding for a while in the US. There's different tactics that they use to kind of offshore inflation, but they're running out of options. I mean, folks listening would say, well, MC, what are some of the examples? How did they offshore inflation? Labor. They went overseas, whether it be China, other countries. A lot of the manufacturing and the labor was outsourced there. It didn't stay in the United States because it would have seen an inflationary event with regards to paying people. So labor goes up, it gets offshore, inflation kind of stalls, right? And then, of course, the way that they calculate it these days is not even close to how they calculated back 20, 30 years ago. There's a newsletter that I subscribe to for John Williams' Shadow Stats. If you want to get accurate economic data, he just breaks it down how they used to calculate it before all the shenanigans. You know, the joke is if you want data, if you torture data, it confesses. So there's a lot of torturing of data.
Yeah, no, I appreciate that. Guys, if you like what you're hearing, you know, you want to talk to MC and his team about some of their investment strategies, we're going to keep going here in the video. But if you know you already want to have that conversation, go ahead and drop an email to ninja@vipfinancialeducation.com. That's ninja@vipfinancialeducation.com. We'll drop a link to that below. We're also going to drop a link of MC's previous playlists here. We're going to talk about infinite banking here in just a minute, but he has talked on our channel multiple times about that. It's a great time to get some knowledge on that, particularly with the inflationary times that we're in right now. Just a couple stats, and you know, in regards to this inflation, gas up 58% year over year. 58%, that is unbelievable, which is the largest increase year over year since 1980. Guys, everyone gets affected at the gas pump, unless you've got the electric vehicles. The people that are kind of the naysayers on inflation, probably the same people that started using the word transitory when it had no meaning in the conversation. We all knew that that wasn't going to come. We're starting to talk about base effects. Right, so they're saying, "Oh, it's just the base effects of either being in a pandemic or now we're coming out of the pandemic." You can't compare apples to apples. It's actually apples to oranges, whether it was pre-pandemic, during the pandemic, or you know, we're still in the pandemic, but people are saying we're coming out of it. Does that base effects, does that hold me water, in your humble opinion?
No. So what I would say is the folks that are making all of that statements, and side note, brilliant marketing from the Fed, by the way. Whoever writes those speeches, I mean, I give credit in life where credit is due. You got to hand it to them. They were essentially handed this information. They go, "Oh, how do we present this in this manner that," and puts a positive spin on it. So transitory. What a classic.
Right.
But yeah, base effects. No, you know what I would say is the folks that are making these statements and that are in these positions of power, they don't live like all of us, right? They don't go to the grocery stores, I'm assuming themselves, for the most part. They're not out in the economy. A lot of them are on bubbles, whether it be New York, or whether it be Chicago, whether it be LA. They don't live like we live, right? In just regular America, in the economy, boots on the ground, as they call it in reports. So I think they've lost touch a little bit with how most people live, the challenges that people have, the challenges that companies and small businesses are going through right now. And as an investor, because you are with your boots on the ground, living in the real world, as I call it, in a different reality from these folks, and you're living, you know, within communities where there are small businesses, where there are things going on, you have a competitive advantage, number one, because most people believe what they see on TV, and it's absolutely not reality. So as an investor, you having boots on the ground and living in the actual real world gives you a big opportunity to take advantage of politically distorted positions or situations. And there are many of them right now.
MC, we're going to go ahead and draw to a close. If you don't mind, we're going to continue to bring you back here on the channel periodically and share your wealth of knowledge. Obviously, times are going to continue to change, and we'd love to get your input and have you weigh in on some of this. So guys watching from home, smash that thumbs up button below. If you love this content, you want us to continue to bring people like MC on the channel. If you're not a subscriber already, go ahead and ding that subscribe button and that bell notification. That's going to give you the heads up as we bring more great content on the VIP Financial Education YouTube channel, where we talk about all things credit, capital, and cash flow. Until next time, take care and make it a great day.